Volkswagen Emissions Scandal by www.profitabletradingtips.com. Volkswagen, the largest automaker in the world, is in deep trouble due to an emission scandal. The company's CEO resigned, and the company has put aside $7.3 billion to deal with the issue. CNN Money reports on the emissions crisis. Volkswagen Chief Executive Martin Winterkorn resigned Wednesday as a growing scandal over falsified emission tests rocked the world's biggest car maker. The scandal broke Friday when U.S. regulators said the German company had deliberately programmed some 500,000 vehicles to emit lower levels of harmful emissions in official tests than on the roads. It exploded into a global crisis Tuesday when Volkswagen, VLKAY, said its internal investigations had found significant emissions discrepancies in 11 million diesel vehicles worldwide. The company's stock price has crashed, causing big losses for investors such as the Gulf state of Qatar, and trust has been shaken in a brand that is at the heart of German manufacturing and exports. Volkswagen, which also owns the Audi and Porsche brands, overtook Toyota (TM) earlier this year to become the world's biggest automaker by vehicle sales. This matter will end up with criminal fines and substantial criminal penalties. The ADR for Volkswagen was trading in the $36 to $38 range when news broke. It fell to $30 a share and then to $26.50 a share, and the bottom is not yet in sight. Damage to the brand name. German engineering is rightfully famous and trusted. Many German products sell at a premium because of the trust that buyers place in various German brands. Volkswagen itself is a household name, first built in the Nazi era in Germany as the people's car. Now we see that Volkswagen was advertising top-notch clean diesel cars and generating a big lie. The damage to the Volkswagen brand name is probably 100 times worse than the news about higher than reported emissions. Fortune says that the emission scandal fallout will last for a long time. No one knows what will happen to the $221 billion in sales car company, the world's largest, going forward, and whether the deception stretches all the way to the CEO, Martin Winterkorn. But one wonders what would have happened had the company opted for exaggerating its results rather than falsifying them. The plot goes far beyond one or two people hiding out in a cubicle and must have involved hundreds of people building such a system and making sure it was implemented inside of 428,000 cars. One wonders what the company might have been able to accomplish instead if it had put all that brain power toward meeting emissions requirements rather than circumventing them. Lots of people will wonder about these things as they switch brands and never come back to Volkswagen. Trading Volkswagen. The New York Times discusses how Volkswagen stock falls as they attempt to contain the fallout. Volkswagen said it would stop selling the remainder of its 2015 model Volkswagen and Audi diesels and not offer its 2016 diesel cars, which were just arriving in showrooms in the United States. These measures did not stop Volkswagen shares from plummeting more than 20% when trading opened in Europe on Monday. Analysts say that Mr. Winterkorn will have to answer tough questions, including when he and other top executives at Volkswagen, which is known for being a tightly controlled autocratic organization, first learned of the deception. The bottom line issue for Volkswagen is public perception. If trust in Volkswagen and other German products disappears, so do sales, and down goes the stock price again and again. Traders will want to keep adjusting their lower trading stops as they short the stock. For more insights and useful information about trading stocks, commodities, options, or Forex, visit www.profitabletradingtips.com.